Okay, I'll start. I'm gonna do a virtual tour first, and then we'll go with Andy with any mortgage lending questions. So we'll do a Matterport tour. If you ever played any PC games in the 90s, you'll be okay to navigate this, like Counter-Strike, that kind of stuff, or Sims. I don't know if you guys remember all of that. Okay, so the house is 5230 West Winnemac Avenue in Chicago, neighborhood Jefferson Park. It's about 5-minute walk to Jefferson Park, Metro and Blue Line. There's a park right across it. It's a 4-bedroom, 3.5 bath. So let's start. So this is the entryway. So the first floor, oh, no, this is the basement, I'm sorry. Okay, so this is the entryway right here on the left. So we have the living room. We have this house has 2 fireplaces, gas fireplaces. So the first one's here in the living room, hardwood floors. This house was built in 2007. And to the left is the first bathroom, which is a half bathroom. So sink, toilet for your guest. And then over here, we have the chef's kitchen. The island, granite countertops. This right here, door handles and the hinges are brand new as well. New faucet, the stove and the oven. All appliances are included: the stove, oven, microwave, refrigerator, dishwasher. The brand is Viking, Bosch. Cabinets are newly painted. This is the second fireplace over here in the family room. It's also gas. And then we have to the left is your dining area. And if you go to the back, there's a deck in the back right here. Unfortunately, this Matterport does not go outside, but you could kind of see it. You can see it. And then right here is a detached 2-car garage. Let me know if I'm driving too fast.
You're doing good. Just don't trip.
Okay, I won't trip. Let's go upstairs. Okay, we have messages. Hang on one second. We have some messages on Facebook. Okay, 1 second. Trying to navigate multiple screens. Sorry, you guys. Hang on 1 second. Okay, let's get back on. So here's the office that, so when this is the entry, the living room right here, and then you have your office right here. With the pandemic, it's very good space for remote learning for the kids, or if you're working from home, or if you're a business owner, you can work right there. Let's go upstairs. To the ones that just joined us on Zoom, welcome. I also shared it on Facebook. If you share the Facebook live post, you have a chance to win a $5 Starbucks gift card within the next 24 hours of sharing. I'll pick 2 winners tomorrow. So this is the master bedroom. The master bedroom is 18 by 15 feet, which is about 270 square feet. And then we have the master bathroom over here. So this one has a his and hers sink, or his, her. And then we have the shower, walk-in closet, and then here is the recently updated bathroom. So it has a deep soaking jetted tub. Who loves tubs? You? With some bath salts, right? Okay, let's go down the hall. So we have the 2 other bedrooms this way. Right here is the laundry room. I won't be able to open it, but if you schedule a private showing, we'll be happy to show it to you. This is one of the second bedroom, which is 12 feet by 11 feet, 132 square feet. So it's either for the kids or if you want to make it into another closet. So there's the closet right there. Let's go to the third bedroom. So the third bedroom is 18 by 13 feet, which is about 234 square feet. Okay, breaking news, you guys. I just received a message from the listing agent. The price is reduced $50,000 today, and they're including the patio furniture. There's a new entrance door, which cost about $3,500, which was installed yesterday. So act now, text me, call me. And this one right here is the other full bathroom. So if you have any little ones, they love those baths, or grown folks too. You don't have to be little.
About little adults?
If anybody has any questions, feel free to put in the chat, or you can unmute yourself. So that is the second floor. I'm going to turn around so I can show you how to get into the attic. You guys see right here? So just pull it down and then the stairs will go up there. So some more space for things, for Christmas decorations, Halloween decorations, clothes. Okay, let's go downstairs. Let's go check out my favorite part of the house. I do have a driver's license to operate this, if anybody's asking or wondering.
You didn't crash yet, so you look fine.
So there's the entry for the outside. Okay, the reason why this is my favorite part, the basement, is because it's heated floors. Living in Chicago, you guys know how it is. It's only 3 months that it's hot and the rest is cold. And I like to wear, I like to walk in the house barefoot. This would be nice. You have your entertainment center right here. They even have a poker table. And the wet bar. And on top of that, right here is a beverage chiller. Keep your drinks chilled.
Does the drinks come with the house?
Sure. I'll include it.
Will include it?
Another breaking news, all the liquor can be included also.
Seriously? That's what the listing
Yes, seriously, right here. I would not say it's
Nice,
not true. So,
nice.
so this is the full bathroom.
This is what happens when you ask.
So all that drinking, all that free liquor, maybe you need a cold shower or something right here. So you don't have to go all the way upstairs. You could take a shower right here.
There's a seat too, huh?
Yep. And a VIP seat right here. Oh, okay. I do apologize if anybody has any motion sickness. Right here is the utility room. Okay, now we're gonna go check out the fourth bedroom. Fourth bedroom or the kids' playroom. So right here, they made it as a kids' playroom. It's carpeted. Or exercise room right here as well. Anyone else that, any part of the house that you guys want to see again?
Hey, Princess, does that utility room have a washer dryer in it?
The washer and dryer actually is in the second floor. It's in
Okay,
the
thank
second
you.
floor, huh?
Thank you.
So once you folded your clothes, you don't, you know how some houses they have it in the basement. Since everybody, all the bedrooms, most of the bedrooms are in the second floor. So once you fold everybody's clothes, just walk into the bedrooms and right there, saves you a trip. So again, all this liquor can be included.
Can we walk up to the washer and dryer, Princess?
Washer and dryer. I did try to open that door.
Oh, it's in the door. Got it.
Yeah. I did try to open it. Let me try again. Okay, the owner will hire a bartender complimentary to congratulate the new buyer as their new home celebration. Woohoo!
Wow.
Thank you, Mario. Oh, the home also has a dual HVAC unit, so it's more efficient and the cost. Let's see. After seeing that bar, I don't know if I could drive this again. I don't know if you guys noticed. So right here, laundry room.
Yeah.
I'm not able to open the door. But if you want to see it, again, schedule a private showing. And we'd love to show it. We'd love to show you the house. What else? It's Arlo security cameras with Arlo solar panels. It's a new high-end washer and dryer. So if anything, send me a text or email. I can send you out any picture. I'll ask for the pictures. If it's not, let me check over here. So the patio, they're saying the patio is included. The patio furniture, I mean. So it's ready. Right now it's summertime. We have about, it's June.
That is nice.
Looks nice.
We have about 2 months till it gets cold, chilly. Even when it's October, you could still do sweater, get maybe a fire pit there. You guys are welcome to come by this Saturday. The open house, personal open house, will be from 11 a.m. to 2 p.m. Any questions about the house, you guys? So here's the floor plan. To access the virtual tour on your own, you know how everybody likes to home shop late at night? You could go on Realtor.com, put in the address 5230 West Winnemac Avenue, Chicago. And the way to do it, I'll show you where to go. Does anyone have any questions about the neighborhood, Jefferson Park? Andy just actually moved into Jefferson Park. I used to live there years ago. It's a nice neighborhood, great school. They have great schools around there. So to look at the virtual tour on your own, Realtor.com, and then you go over here, virtual tour. So since there's a park across the street, so there's gonna be plenty of parking. So if you wanna show off that beautiful house, that beautiful brick house right here, the bar, you got the drinks already covered. And there's plenty of park. Since there's a park across the street, there's plenty of parking for your visitors. You know, and with things opening up, so you could either do a Matterport tour or a video tour right here. And then you have your photos.
It is walking distance to the Jefferson Park Blue Line as well.
Yes, it's walking
So
distance.
there's the Metro.
Metro as well, yes.
This one right there.
So
And it's not very far from either 94 and 90.
and also O'Hare. Just go down on, just hop on 90, and then it'll take you to O'Hare right there. So it's about 9-minute walk to the Metro Blue Line station. And then the school's right here, Bubin. I'm not sure if I'm pronouncing it right. And then the Roberts Daniel Square Park across the street, as I mentioned. Any other questions, you guys?
Very nice house.
Yes. So if you like to see it in person, you have a chance to go this Saturday from 11 a.m. to 2 p.m. Mario will be there. Or if you want a private one, text me or call me or send me an email, whichever, and I'll set up a showing. Now we'll do some questions for Andy. He's a VP, Vice President, right? Vice President mortgage lending for mortgage lender for neighborhood loans.
You're making it sound so good, Princess. Or a senior mortgage loan officer, whichever you prefer.
Do you want to introduce yourself for a little bit, Andy? And then we'll go with the questions.
Sure. My name is Andy Gaston. I've been in the mortgage business for about 16, 17 years. Now, I'm currently with Neighborhood Loans for the past 2 years. I do have experience with small, medium, and big banks. So I know a lot of the systems and I know how they work. And the reason why I'm at Neighborhood Loans is I feel like I could help more people. The guidelines a little bit, it's less overlays, so I could help more people get them approved. And I enjoy my team and working with referral partners like you. So yeah, if you have any questions for me, go ahead and ask.
I can start with basic questions. If you guys think of any questions in the meantime, unmute yourself. One of the questions that I get a lot from buyers that I've worked with is, do I need great credit to get a mortgage?
Obviously, it's good to have good credit, but you don't need to have a 700 score to buy a home. Right now, with a 600 credit score, we are able to have your home with an FHA. Actually, prior to COVID, it was 580. So it got a little bit stricter. Actually, it went up to 640, and now we're able to do it at the 600. On a conventional loan, we are able to do it with a 620 credit score. Although, to be honest with you, if you really want, a decent rate or even have down payment assistance, which could help you buy a home, you could probably strive for a 640 or better. But yeah, you don't need a 700, 720 credit score to buy. If you have a 600, it would be possible. But obviously, with the higher credit score, you have a better rate and better chance of getting it approved. So I could work with you with that. Worst comes to worst, if you or anybody you know has a credit score below 600, and I know Princess also has some avenues where we can help with either credit repair, or if it's very close, let's say if you have a 595 or 590, we have the capability of do a rapid rescore and let you know and take the guessing game out of the way and let you know what you need to do to get to that 600 or 620 or 640. So we can specifically tell you what you need to do. Like, for example, you could, I don't know, say you have a couple of credit cards that, all you might need to do is pay a couple of $100 and not the whole thing. And, that will increase your score. So yeah, you don't need a high score. But obviously the higher it is, the better.
Okay. The next common question is, how much of a down payment do I need?
It's a good question. Another popular misconception that people have is you need to have a 20% down payment to buy a home, which is not true. With an FHA loan, you can have a minimum of 3.5%. So there's good and bad in that. And I'll mention that later on. On a conventional loan, you can even have as low as 3% to buy a home. The good and bad on FHA is if you get an FHA with a 3.5%, you'll just always have that PMI on there because you don't have a 20% down. So the good thing about if you do have 20% down, you just don't have the mortgage insurance when you buy. But with an FHA, it is 3.5%. You do have that mortgage insurance that you have to be included on there. Not only that, there's also what we call an MIP or MIP added into the loan amount, which increases the loan amount a little bit higher. So which is something, I guess you could say it's a bad thing, but hey, it's a good thing because, well, you don't, like I said, you don't need to have a 700 credit score. You can have only a 600, and then it's only just 3.5%. With a conventional, it's a slightly higher rate, but once you get to that 80% threshold of the loan to value, and I know I'm throwing all these mortgage jargons at you guys. But as soon as you get to that 80%, you are able to have the opportunity to have the mortgage insurance taken off on a conventional loan. So yeah, only 3.5 for an FHA and 3% on a conventional. If it's a little bit more confusing for you, just let me know. I'll go ahead and explain it to you one-on-one so it's not confusing. And Princess has all my information on the screen right now. So go ahead and chat down my cell phone or my email and go ahead and email or call or text me and I can answer them for you.
Or do a screenshot of this. Another question is,
Just take a picture, whatever is most convenient for you.
what are closing costs and how much should I expect them to be?
Closing cost is the cost that you have on top of the down payment when you buy a home. A lot of them are title fees that that most of the time the seller attorney chooses. A lot of them are escrows, escrows and prepaids for the property tax and homeowners insurance, and things like taxes, government taxes and things like that. I approximated at about, I don't know, 5 to 8,000 or so on top of the down payment. It really depends on a lot. So there's no just one fee there, but that includes all the closing costs that you pay for, let's say an administration fee or even your attorney and things like that. So those costs are explained when you get a specific document called the loan estimate, or towards the end of the loan, what we call the CD or the closing disclosure. Yeah, those are the fees on top of the down payment, obviously, that I mentioned earlier.
Okay, Yolanda has a question in the
Sure.
chat. It says, which one is better? Yola, are you asking about
In the chat,
the Yola?
conventional or FHA, maybe? Conventional FHA?
Yes, yes. She's asking if it's a FHA or conventional, which one is better?
It depends. There's no FHA or conventional. It depends on the person, on the buyer. If you are somebody that hasn't saved a lot yet, it's probably good for you to do an FHA. Also, I forgot to mention earlier that your debt to income ratio with an FHA is a little bit more lenient. It's about 56% on the debt to income ratio. And what that is when we divide your total monthly debt with your total monthly income, it's in an FHA, it's a little bit more lenient. It's 56%. In opposed to conventional, it's 50%. So it depends. If you're somebody that has saved and with a higher credit score and able to do a higher down payment, it might be good for you to do a conventional. To me, conventional it's good long term. FHA it's good, enables you to buy. It's very popular for first time home buyers because again, the lower down payment and the lower down payment requirement and very lenient debt to income ratio. So there's no right or wrong answer. So a big part of this whole process is I want to allude to the pre-approval process. So this is the time that me or any loan officer could get to know you more, and then we could properly advise you on which one to choose, whether an FHA or conventional, because there's no right or wrong answer. It really depends on who you are and what kind of credit score, how much you save, what's your income, how much debt you have, and all that stuff. So
Okay. We'll go with
hopefully
the
that
next.
answers questions, Yolanda.
Great question, Yola. Next one I have is should I lock my interest rate?
I get that question a lot. Believe it or not, we don't have a crystal ball. We don't know when it's a good time or when it's a bad time. Although I can say that when it's closer to your closing dates, within 30 days typically, that the interest rate, or I should say even the points, is lower. I don't want to confuse when I say that. So every particular rate has a corresponding points that comes with it. So you can actually pay down, you have a one-time fee to get a lower rate if you like. But, it is slightly trending up already. Although we're still in a very historical low rate now. It does seem to be trending a little bit higher now, compared to say, I don't know, July or August of last year, but you're still low. So I like to say that if you're really comfortable with the payment and the rate that you have now, it's a good time to lock, especially again, if it's within 30 days of your closing date, because that's when the points are lower compared to say a 45-day or 60-day out before you're closing.
Okay.
Hopefully that
Next
answers.
one. The next one is Yola asked this one. What type of mortgage is best for me?
See, Yolanda's already thinking ahead.
She knows, yeah.
Maybe
She has
Yolanda
the right
got the crystal
questions.
ball. Maybe we should ask her when we should lock the rate.
So we'll go with what are discount points and should I pay them?
I mentioned this one earlier too. So discount points is it's the points that you pay every time there is there's a corresponding rate. So for example, on a 3.5, there might be, I don't know, like say a 0.25% of the purchase price that you have to pay. I don't like charging them this discount points. A lot of the loan officers, and I'm going to give you a really big secret with the loan officers here. If it's low enough, we are able to help you out with that. With taking them off, I don't usually charge them. I usually just take it off for the customers that I have. But sometimes it does help. I mean, it depends, especially for the higher loan amounts, especially for this type of property that's worth 825, or it's lower now, right? 775. Because we have to go through. You have to really educate yourself on what the difference is between a particular rate. Sometimes a 3% and let's say a 3.125%. Sometimes the difference is just, I don't know, like $20 or $30. Obviously, if you would have to pay $2,000 of points to get to that, a $10-20 difference in payment is probably not worth it. So if you're only paying, let's say, a $500 points and you're saving $60-70 per month, then maybe it's worth it. But to answer your question, it really depends. Again, I know it sounds like a cop-out answer, but if this is something that we discuss when the time that we look at and what the rate would be in the beginning, and especially when we were about to lock. But
Perfect.
typically, yeah, I don't believe in it. I don't like charging them. It shouldn't be there. More times than not, it's not worth it to pay the discount points. Because
Okay. We have another question in the chat from Karen. At the Karen, in her case, she has a great credit score, a full-time job, but I'm hurting because of my outstanding debt due to my kids' college loans. What are my options to buy a home?
There's a couple of options there. I wish you asked me this question in December or January because we had that the smart buy, the IDA smart buy. We were able to get rid of all the student loans, but unfortunately, they ran out of funds.
Oh no!
I will, Sharon, if you could keep in touch with me, I don't know if it's gonna come back or not. Let's see if it gets more funds. But there are ways to do it. Like for example, well, aside from the obvious and paying them off, when I say conventional, there's usually Fannie Mae or Freddie Mac. A secret that you probably not secret, but most people don't know, it's when there's no payments on there on Fannie Mae, we use 1% of the payment. If we used Freddie Mac, which is also again conventional, we only use 0.5% of the student loan. So an option is using a Freddie Mac and actually just use 0.5% of the principal balance of student loans, and hopefully that could work. Aside from Karen, the obvious of maybe getting a cosigner, another option that it could work, or any of the down payment assistance that the state has now. The state is able to provide $6,000 to $10,000 of down payment assistance right now. There are good and bad within that's 7,510%. So please keep in touch with me. Get my number and we can discuss those options for you.
Okay. Next one we have. Should I get a 15-year or a 30-year loan term?
Again, it depends what kind of person you are. So it's typically you like to do a 30-year term just because it provides you with the lowest monthly payment that you're required to pay every month. But obviously, when you do a 15-year, well, I guess what's good about it is if you do a 15-year, the rate is typically lower than a 30-year fix. But at the same time, the payment is higher because, well, you're paying it off. You're paying it off in a shorter time. You're paying it off in half the time, 15 years. There are other options for you to if your goal is to eventually pay it off the mortgage. There are different options than going to 15-year. Although that's not actually a bad option to have, especially if you're able to afford it. But to me, you can just get a 30-year term, have the what you're obligated to pay lower, and you could just pay extra.
Okay.
A lot of the loans nowadays, there's no prepayment penalty, so you're not penalized if you pay more to pay down, if that indeed is your goal. So if your goal is to eventually pay off your mortgage, 15-year is a good option. Don't get me wrong, especially if you can afford it. And and again, it will also affect your debt to income ratio because obviously, if the shorter time you pay the mortgage, the higher payment would be, which higher payment would also lead to more debt. So the debt to income ratio goes up. So to me, you can always just pay a little extra for your mortgage, and there are months maybe that you don't want to spend that much, and you could go back to what you're just really obligated. But I want to add that there are other options to use for this, like a home equity line of credit, perhaps because it's an amortized loan, to enable to eventually pay off and actually pay off the mortgage in a shorter time period. So if you want to learn more about using a HELOC to pay off your loan on a faster, rather than just waiting for a whole 30-year term, also please let me know.
Okay, and Yolanda has a question too. Is that only for first-time buyers or everyone? Help
Yolanda,
with
that's a
the
very
down
good
payment. She's
question.
talking about the down payment.
There are down payment assistance programs that you do not need to be first-time home buyer, believe it or not. So you can be a repeat homeowner and still get it.
Okay, great.
Yep.
What documentation should I gather?
Good question. So if you are a W-2 employee, so if you get a W-2 at the end of the year, it's typical for any lender to ask for the last two of a lot of things. So last two of your W-2s, so which nowadays is 2019 and 2020 W-2s, the last two pay stubs, the last two bank statements, and your ID. That's, to me, that's the very minimum. If you are self-employed, which means you don't have a W-2, and in order for us to take a look at your income, we take a look at your tax returns. So we take a look at the last two as well, your 2019 tax returns and your 2020 tax returns. If you do want down payment assistance from the state, they typically ask for three. So that would be 2018, 2019, and 2020 tax returns and W-2s. So to be thorough, I guess just 2018, 19, 20 W-2s and tax returns, last two pay stubs, last two bank statements, and your ID. And then, that's the very minimum. Obviously, the more we, take a look at your file and what you need, there probably is going to be more, but that's the very minimum.
Okay. Next one is what is pre-approval?
Another good question. So pre-approval is when somebody like me or a lender actually takes a look at your credit and not just out of the, just guess what your credit score is. And then we've actually taken a look at your documents, the documents I just mentioned earlier. If you're a W-2, again, your W-2, pay stubs, bank statements, and if you're self-employment, your tax returns. So a lot of times when especially if they just pre-qualify, and nowadays a lot of the listing agents has been asking me, what kind of pre-approval is this? Did you actually pull credit? Did you actually take a look at documents? So I like doing things very thorough, and when they provide a pre-approval, it's a legitimate pre-approval. So a pre-approval is that we actually take a look at all your documents and determine that you are going to be able to not only afford to buy the property, but be comfortable with the mortgage payments. And then, so basically you're ready that if you do see a home, like the one we're talking about here, that you're going to be able to make an offer and eventually buy and own the home. Right, Princess? How do you feel if you'd show a client with other pre-approval in hand?
Well, I've told my clients before, let's say they're thinking they could only do a house that's 150,000 without even talking to a lender.
Mm-hmm.
I suggest to them, talk to a lender first, of course, because you have to discuss how much you want to pay a month so you can keep whatever lifestyle you have, and the taxes, property taxes is different in different areas. And pretty much it's depending on the debt to income, like you mentioned earlier.
Mm-hmm.
Who knows, maybe you are pre-approved for a $300,000 house rather than a $150,000 house, or vice versa.
I love doing these, just so I can add, because clients really learn a lot about themselves more than anything. Like, it's very empowering for them to know how much they could afford, what they could afford, and they get to learn about, hey, this is the monthly payment that I'd be comfortable with. So with this particular monthly payment, it corresponds with a particular purchase price that they're comfortable with. So it's actually a very enjoyable process to allow my clients, because they get to know a lot about themselves. And not only that, but you actually look at a house feeling empowered. You look at a house knowing that, hey, if I really love and want to make an offer on a house, that I'm going to be able to buy this. In opposed to somebody that goes into a home and an open house that without a pre-approval, and you're going into it blind, not knowing what the monthly payment would be or what they're capable of buying or what kind of credit score they would need, all these things. So it's actually fun and a good process to go through before even looking for a home. So I definitely recommend get a pre-approval before looking for a home.
Yes.
Go
We'll
ahead,
get
Mr.
pre-approval.
I see
I'm
you.
sorry.
I see you raise your hand. Actually, Mr. the only one I could see on my screen.
I have a question for you, Andy.
Sure.
In the banks that you work with, do they offer simple interest loans still? The banks that you're working with now, or what types of loans are they offering right now?
It depends on what kind of person you are. So there are different types of loans. So the two most common ones I mentioned earlier, the FHA and conventional. If you do have a property that you want to buy that may need a little bit more work than usual and won't pass regular FHA, there's a 203K. We typically also work with certain subprime lenders that have a little bit of more creative type of financing. So for example, for self-employment, a lot of times when they provide their tax returns, because we don't look at how much you or the business you have made, we look at the one that you deduct all these expenses on there. So a lot of times, and I get it, CPAs want to keep that number lower because they don't want to pay taxes. But then it kind of goes counterproductive for someone who wants to buy a home. So there are loans, for example, that would have like a bank statement program. So instead of looking at the tax returns, we actually look at the deposits on the bank for the past 12 months or 24 months. But a lot of those programs have been suspended for a little bit because of COVID. I know a lot of them are coming back a little bit. So if you need a little bit of more creative financing, please let me know. Depending on specifically on what that is. The interest rate, and you asked that, they're typically higher than a regular FHA conventional. So that's the drawback. The good thing is you're going to be able to buy the home with those kind of programs, but typically the rates are 78% or higher than that. So typically when they get something like that, you want to refinance it in a year or two once they get all their financials back to normal without taking all the deductions and things like that.
Thank you, sir.
You are welcome.
Next one I have is what is an escrow account?
So an escrow account is an account that it's almost like your money to put aside. It's actually your own money. A lot of times an escrow account is opened for a property tax or homeowners insurance. So the way it works is, when, just in case your property tax or homeowners insurance go up, your mortgage payment don't go up with it. They actually take it from the escrow account because it's actually your own money. As a matter of fact, if you don't use the money in the escrow account, you actually get it back. It's not something that the bank uses as, you asked earlier about closing costs. It's not closing costs. Although you put it aside for a part of closing costs, but it's something that the bank don't take. It's your own money. So it's I guess you could call it a just in case fund, just in case your property tax and more insurance go up. Hopefully that answers that question.
And how long does it take? Wait, why does it take so long to close a mortgage? I get that question a lot.
Oh, you have no idea how much I
I
get
know
that.
we bug you. I know us being a buyer's agent, we bug you. We bug the lenders. We have the they call that clear to close.
So it's a typically a 30 to 45 day process, but it depends actually on you, depending on the client, on the borrower. If you are somebody that that would provide documents right away, a 30-day or if even less than that is possible. But if you're somebody that would take a week after we ask for the document, well, guess what? It's going to take probably more than the 45-day process. But to be fair, sometimes it's nothing to do with that too. Sometimes there's just a lot. For example, if you buy a condo, I know that it's not in this case, but we don't only underwrite you, we also underwrite the HOA, the homeowners association. So it depends on how fast they go as well with providing documents. And there are certain things that we don't control as well. So for example, an appraisal which is something that we require to have as part of the mortgage. A lot of these appraisers right now are so backed up because it's such a busy time in real estate or in mortgage in general. That it could take them 10 to 2 weeks just to get the report back. So there's no such thing as really typical in real estate or mortgage. So it really depends. But um, just to give you a straight answer, if you are able to provide documents right away, the better it is. For sooner it is to close on the mortgage. But typically at 30 to 45 days.
And we have, how is my mortgage payment determined? I think you mentioned that before too, right?
Yeah. So when you pay your mortgage, there's a lot of things that comes within that payment. So not only are you paying the principal and the interest, you also pay the property tax and the homeowner's insurance. And if you don't put 20% down, the mortgage insurance. So we call it in mortgages the PITI, PITI, the principal, the interest, the taxes, and insurance, and maybe homeowner insurance. Now, let me say that also that you are not actually required to pay the property tax and homeowner insurance, but honestly, it's good for you to just include it. Just make it simple and convenient. But if you choose not to, you don't have to. No one's going to twist your arm and pay it. But to me, it's good because it's convenient. But if you do choose, however, to separate the property tax, the homeowner's insurance, separate from the principal interest and the mortgage insurance. Mortgage insurance, you kind of have to include it. The bank doesn't know if you're paying your property tax or homeowner's insurance, so there's a little bit of a risk. So it's typically about a 0.125 increase in rate with that, if you choose to do that. Just because mortgage is all about risk, so we try to determine risk, and that kind of corresponds to what kind of interest rate and ultimately an approval for you. But yeah, so when you pay your mortgage, you pay the principal, the interest, the property tax, homeowner's insurance, and if you don't have 20% down, the mortgage insurance.
Okay.
Hopefully that's not going to confuse anybody, but I know so many.
I know it's a lot of information, but we could always schedule an appointment with you.
Call me. You guys already know I work at nights, and Princess knows I work on weekends.
He does not sleep, you guys. He's a beast.
Well, we have to work hard.
His license in multiple states too, so his time zone is 24-hour zone. Okay, the last one I have for one of the most common questions is, will my monthly payments change during the loan term?
Well, if you get nowadays, it's if you get a fixed rate, which is very advisable, because again, we are in a very historical low rate still environment that you can, if you get a fixed rate, it does not change. Well, you can really choose to have what we call an ARM or ARM or adjustable rate mortgage, but it's riskier. Typically, it's a lower rate than a fixed rate, but nowadays it's very similar. And because we are such a historical low rate, it's better for you to get a fixed rate, and I would highly recommend you, especially now. I don't know if you remember back then in 2007, 2008, 2009, a lot of the properties that were bought had that ARM. It was at that time, it was very popular to do what we call a 228. It was only fixed for the 2 years, and it would change after the 2 years. So it was very risky, and the rate went up. Even with a lower monthly payment, so it's very risky, and a lot of people went into short sales and foreclosures eventually. But nowadays, again, the rates are low. Just get a fixed. I'd really advise for you to get a fixed rate, especially now that the rates are low.
Perfect.
How low are the rates, Andy? How low are the rates now?
Again, depending on what kind of person you are, with FHA is typically lower than a conventional. You can still get high twos or low threes on an FHA still. On a conventional, you can still get a low threes to mid threes. Obviously, that's not with everybody. Obviously, with a higher credit score and and things like that, you can have a lower rate than that, but it's still low. This time last year, we were at the fours already, just in comparison. I mean, I'm sorry, not this time because it was already COVID. It was starting to drop already, but pre-COVID, we were already at the fours. So it's so comparison prior to COVID, we were still in a very low rate still compared to them. It probably bottomed out probably around the July, August, September time frame. To be honest, it's slightly higher now, but it's still low. It's still lower before COVID.
Thank you.
Perfect.
You're welcome.
Thank you, Andy. And Yolanda said that she'll text you later.
Sounds good. I will be working.
All right, you guys. Thank you for joining and for your support. Now we're gonna be doing the raffle.
The fun time.
Woohoo! So let me get my wheel.
So how many people could win? I see 7 people.
3. I put 3 winners. Here Mario, Yuki, Kozik, Portia, Karen, Yolanda. My mom is on here, but she did not.
Why not?
She's in the other room. I told her to log on.
So which one is this one? This is the Walmart one?
Yeah, the first one will be a $10 Walmart.
It's this one.
So just want to make sure I have the right amount of people.
You
One.
email me whoever wins to what most convenient way to pick it up, or maybe I should send it. Or if
Maybe
you're
you just mail it out.
either we'll figure it out. Either you can stop by my office in the city or go to the suburbs in Downers Grove, whichever, or I can mail it. Whichever's most convenient for you guys.
Because Andy, most of the people that's attended over here, it might be an hour drive.
Oh, really?
Yeah, with Karen, Yolanda, Portia, Kozik, and Yuki. Okay, you guys, you ready? The first one is a $10 gift card to Walmart. Good luck, good luck.
This is a cool website.
It's fun.
Oh, wait, let me get rid of one more person. She did not attend. But she won. So that was a free trial.
Test run.
Yeah, Anna registered, but she did not attend.
Oh, so that's what you get. Should have gotten $10.
So I just want to make sure I have it. Karen, Portia, Kozik, Yuki, Yolanda. Karen, Portia. Yep. Okay.
Somebody gotta tell her now.
I'll just trial you guys. Get ready. $10 Walmart gift card. Whoa.
No whammy.
Kozik.
No whammy. What were you talking about with that?
No whammy, no whammy, no whammy. Okay. The second one, it's
Just
either
email me with-
Costco or Home Depot. Huh?
Huh?
Do you guys want Costco or Home Depot for the second one?
Or Whole Foods. I'll add Whole Foods.
Or Whole Foods, but we're only gonna give 3 gift cards, correct?
I just
Whole
want to win.
Foods.
Yeah.
Which do you prefer, Portia?
I kind of forgot to bring Home Depot.
Home Depot.
Home Depot, okay.
Home Depot.
This
Good
one's
home,
for
but
Home Depot.
I have it.
This one's for Home Depot, $25.
Okay.
No whammy, no whammy, no whammy.
And stop.
Oh, Yuki.
Yuki.
Congratulations, Yuki.
Congratulations, Yuki.
Thank you.
Please email me
Thank
your
you.
contact information or what's the best way to give you the Home Depot.
Okay, last one, we have Costco.
Should I give them the option, Costco or Whole Foods?
Sure, ladies,
Whichever one.
whoever wins.
We'll give the whoever wins the option.
Yeah.
We can do that.
Okay.
Whatever.
They just want to win. All right.
Well, you got, looks like one third.
33%.
33%,
33.33.
Ah,
Costco, Karen. That's her favorite store.
congrats.
So you're saying
Thank you. I'll take the Costco.
All right. So it's this one right here.
Thank
Okay.
you.
Okay, you guys, you have another chance to win.
Fill in the-
I'm giving 24 hours to share the link on my Facebook. All you guys are my friends on Facebook. Share that link within 24 hours, and then you could win a $5 gift card Starbucks. My mom just got into the room.
Oh, they can see me?
No, they cannot see you. I have a background.
Hi, Mom.
It's sharp.
Oh,
Hi, Tita.
hi, Andy.
Okay, you guys, thank you for your support. Thank you for your time
Thank you, guys.
attending. Hopefully you guys learned a lot. I know it's a lot of information to take in. Always you could text or call Andy to set up an appointment. For anybody that wants to see that beautiful home, 5230 West Winnemac. Again, there's a in-person open house this Saturday from 11 a.m. to 2 p.m. Or you can text me or call me to schedule a private showing. But I can hear you. Just in the back. Bloopers. They can't see you, but they can hear you.
Like
Okay.
There's another one.
Thank you guys. Have a good night.
Thank you. Good
Okay,
night.
Good night.
Bye-bye.
Number one, just
Thank
email
you.
me. Let me know what's a good way to get you your prizes.
What's your address?
I have one on in Old Irving Park office, and I'm also in Downers Grove, and I have one in Ducktown.
Okay.
Okay.
I'll email you.
Okay, just email me, whichever is most convenient. We'll do it that way.
Thank you.
Easier.
I'm gonna close out with a video of that beautiful home. Bye guys. Thank you.
Good night.
Bye.
Good night.
All right. Salamat po.
Salamat po.
I like this guy already.
That's a nice house.
There's more.
No.
All right, I'm logging off.
All right.
Guys.
Thank you.
Signing out. Good night, everyone. Thank
Bye-bye.
you.
Great job, Princess.
Good
Thank
job,
you.
Princess.
Thank you for your support. Thank you for
You're
attending.
welcome.
Good job.
Bye-bye.
Bye-bye.
Good night. Bye.